What's going on, guys? Cameron Lombardi back here with another stock market investing video. Today we're going to be talking about how the election has affected the stock market. It has been absolutely ripping the last week. It's up 6.3%. That's pretty good considering all the uncertainty that we have with the election and everything going on right now. So we're going to get into that, and we're also going to go over some upcoming plays that I'm going to be making with a strategy that is called the wheel strategy, which is used to generate passive income. Before we get too deep into that, guys, if you like this video, please hit that thumbs up button right below. That helps share the video with more people on YouTube and helps me spread the knowledge. And also, if you are liking these videos so far, hit that subscribe button so you can continue to learn and follow along. All right, guys, so again, let's take a look here at the week on the S&P 500 ETF. So we're looking pretty good here, up 6.38%, about 6.4% on the week. And the portfolio held up pretty well today as well. We're up $377 or 2.21%. As you can see, after hours, it's coming back down a little bit. It's a little bit of a correction. So it's kind of interesting here how over the last week with the election and all of the uncertainty, the stock market has actually done so well. So why is that? A lot of people are wondering with all of the, question that's still up in the air, who's going to be the president. It's going back and forth between Biden and Trump. Right now, it looks like Biden's going to get it. But Trump, of course, is going to challenge that. There's already lawsuits and different allegations and things that are going on for fraud in different states here and there. We'll see what happens. But overall, the stock market's been responding pretty positively. And I think one big contributing factor as to why the stock market is doing so well is because there's still going to be a balance in our government. It looks like Biden is going to win the presidential election, but it looks like also that the Senate will be controlled by the Republicans. So Wall Street doesn't like big taxes like the Democrats want to put into place. And if the Senate is controlled by the Republicans, they won't let those big tax bills come in. The taxes hurt these businesses that are in the stock market. Wall Street wants to see lower taxes so that businesses can continue to hire more people. They can continue to grow and expand and reach more and more people. And that's how businesses make money. And that's how these businesses in the stock market make money. So if the Republicans in the Senate don't allow any of these, high tax bills to be passed, that's good news for the stock market. That's good news for Wall Street. So I think that's one major contributing factor, that we'll still have some sort of balance in government. And that's kind of why the stock market, I think, is responding so positively, even with all of this uncertainty of who's actually going to be leading us as the president of the United States. So one reason that my portfolio has been doing so well over the past week is Apple. I've been adding more and more shares to my position here. We're up to over 47 shares. And as you can see today alone, it was up over $4. And over the last week, it's been up about 6.3%. And it was down here earlier around $107 or so. And I actually bought quite a few shares down here and added to my position. And, it's been great ever since then. I'm waiting for a little pullback now, which it looks like after hours here it's pulling back a little bit. And maybe we'll get a little pullback tomorrow so I can add even more. Again, I'm working my way up to 100 shares of Apple so I can begin to sell covered calls on Apple. And that's one way that I make passive income in the stock market. So let's get into that a little bit more. I'll show you guys exactly the step-by-step process of how to sell a covered call, what it means, what the numbers look like. So in order to sell a covered call, you need to have 100 shares of whatever stock that you want to sell because each options contract is 100 shares. So what you're going to do is you're going to hit trade and you're going to hit trade options. So you'll see different expiration dates along the top. Today's November 5th, so this is looking forward to next week, November 13th, 20th, 27th. These are all Fridays, the end of the week, the end of the stock trading period is Friday afternoon at 4 p.m. every week. So what we're looking at here is you can see the share price at $118.03 right now. So as we're looking up here on the options chain, you see 119, 120, 121, 122. So these numbers on the left here, these white numbers, represent the price of the stock, and these are called a strike price. So as you can see right now, the stock's at 118.03. So as you come up, there's different call options here that you can pick. So let's just say we pick the $123 call here, and to the right, you can see 1.09. So that's $1.09, and that's going to be per 100 shares. Again, each of these contracts is 100 shares of the company, so that's going to be $109 that will get paid to sell a call. So you can see at the top here, there's buy and sell, and there's calls and puts. So again, we're looking at the sell call here in order to do this. So let's go ahead and click on that. So we're clicked on the $123 call, and we're going to sell that for November 13th. So on the left, you can see here contracts times 100 shares, because each options contract consists of 100 shares of the stock. So you would hit 1, and then on your price here, you would put $1.09 if that's what you're happy with getting paid. If you want more, you can put a number in here and wait to get filled on that order, meaning your order will be executed. Sometimes it does, sometimes it doesn't. If you pick a price that's in between the bid and the ask here, you can see that in green underneath the limit price, then you're likely to get filled pretty quickly. So after you have this filled in, you're going to go ahead and hit review, and it's going to stop me because I do not have 100 shares of Apple. It will not let you do this unless you have 100 shares. If you did, a little swipe up screen would appear, and you would swipe up to complete the order. So again, that would be selling a covered call on Apple, and I would make $109 on that by next Friday. Now there's two scenarios that can happen here. The price of Apple can go up, and if it goes up above 123 and ends on or above $123 on November 13th at the end of the market, then my option would get executed, and I would sell my shares at $123 per share, no matter how high it goes. So again, selling that $123 call is a commitment for you to sell your shares at $123 if it goes up to that price. If it does not go up to $123, even if it's $122.99, you will keep your shares, and you will keep that $109 as well, and then you will repeat the following week to continue to collect more and more money on your shares. So what happens if the shares do get taken away and then you want them back? Well, that's where we flip around to the bottom part of the wheel strategy, and we would go to selling a put. So here, instead of your 100 shares being the collateral for this trade, now your cash is going to be the collateral. So let's just say I wanted to sell the $114 put here at the bottom of the screen, and that's $1.04 per share times 100 shares is $104. So I would get paid $104 to sell this contract right here. And again, I would put 1 and 1.04 would be $104. So this means that if Apple were to go down below $114 on the expiration of 11/13, I would actually be forced to buy 100 shares of Apple at $114. So that's how you would get your shares back, kind of at a discounted rate basically, because right now it's at 118. If you wanted to get them for a cheaper price, you just sell that put. If the stock drops below that $114 price, you buy them at the end of the day on Friday. You buy them for $114 there. Now, if it does not drop down to $114 by that next Friday, you keep that $104, and then you can repeat the process the following week and continue to make about $100 or so every week. Or you can simply just buy the shares back and flip right back to selling calls again. So this is kind of how you complete the wheel of selling calls. Your shares get taken away, and then you sell puts to get the shares back, and you just keep on repeating that wheel and repeating every week, and you're earning about $100+ each week and collecting passive income on your stock. And again, you can do this with any stock. It doesn't have to be Apple. I do this with Jets as well, which is the airline ETF. I have an option right now that I'm selling. Here I sold it for 20 and now it's worth 38. I didn't lose any money, even though it says minus $18 right there on total return. It just means that I could have sold this for more because the stock price has gone up closer to my strike price that I'm selling. So I'm going to continue to keep you guys updated on my shares of Apple. If it does come back down quite a good bit, I'm just going to go ahead and buy the rest of the shares on the way there and just start selling the covered calls on it. I'm really excited to get there. If you guys made it this far in the video, I just want to say thank you for watching this far into it. I really hope that you guys are enjoying this content and you're able to learn something from it. Again, any likes or subscribes would be greatly appreciated. And if you guys want to get started on your investing career, the first link in the description will be a link to download the Robinhood app. If you download it using that link, you'll get a free stock and I will get a free stock. And I will open that free stock in the next video and personally give you a shout out and a thank you. So again, guys, thank you so much for supporting the channel. Have a great rest of the week. We'll see what happens here in the election, and I will see you guys in the next video. Take care.